is good. Welcome. Now back to the first lesson. Now we looked at structure and all of this, and I told you guys that there are times that this whole thing is going to be complex. So let's take a look at simple structure points. I might need to get a clean chart. Okay, I can just do this, right? All right, now simple structure is whenever you come to your charts, right, you should learn to go a little bit backwards to understand these things. Okay, let's go to the daily time frame. You should learn to go a little look at what has happened in the past to be able to understand where price currently is. So with that, if we shrink our chart a little bit now, we can see that we had a couple of structures here. Okay, let's just go straight to here because this is where volume was. Now we can take this whole thing as a tiny stuff, right? So now we can say that this here was structure. So we have a break, then price shifted here, and then price continued, then price continued, and then we had volume that gave us a shift, then price continued. I'm going to be talking about these structure types, and then here, and we can see we have a continuation here, and so on and so forth. Okay, so price moved to the downside, price kept moving to the downside all the way to, so with that now we can now easily see the direction. So when we are just looking at price, it's going to be simple. So all the way to, we have a break of structure here, this broke, then we had another structure here, then we had a tiny bit of structure, then break of structure, pull back, break, right, then break here, then a retest, then break. Then you can see this tiny bit of structure is where I have to be my what, break of structure, and price has pulled back. So I'm anticipating Bitcoin presently to do what, to push to the downside. Basically, this is as simple as it is supposed to be. So since here is the swing high that's responsible for breaking here, there is no structural point here aside from this internal structure, which we are going to be talking about now. There is no other structural point in terms of external structures. So this is where price is supposed to come to. So on the previous course, I've talked about, this is just a walkthrough on simple market structure. On the previous class, sorry, I've talked about internal and external structures, right? You should know what internal and external structure is by now. So it's not something that I'm supposed to be going back to. So if you do not know, then you have to go back to the beginners or supply and demand or structural, video and try to understand these things better. Here, I'm just going to be doing a little bit of complexities in terms of structure. So now you understand why, I'm having this POI here. This is as a result of a flip zone. We talked about the flip zone also in terms of supply and demand. During supply and demand, I taught you guys about flip zones, and that's point of interest, POIs, or zones that price is going to be bouncing from. Now the only reason I'm having this thing here is price might be bouncing from this point on BTC. Why? Because this is a flip zone, right? This is a zone that, or this is a um this is a structure, or this is a direction that had a POI, right, that was supposed to sell, but then it failed to sell. That's what we call a flip zone. That's an area that price tried to, go to its original direction, and then it failed. So the failure of what? Failure of, let's say, a zone that is supposed to hold, basically, is a flip zone. So we had this zone here, right, to be our PY. Now price reacted, and then what now happened? Volume kicked in. So now we're having price drop to this level. So yes, that this is why we are getting reactions from here. So there's a tendency that price is going to fly from here, and when we begin to move from here, this area why I have here is this region is going to be my target. So there's a why to everything, which we are going to be talking about. Okay, so that's why you see me having this. Then when you drop to the when we now drop to the 4 hours, now you now see me having my charts like this. So there's no complication to this thing. It is as simple as possible, right? So back to here. So these are, major type of structures that we have. So now structures can be complicated. Okay, there are times that you are going to be very, very confused on which direction price is really going. I mean, you might know the true direction, right? Which, let's say, is an uptrend. Okay, then you now start getting something like this, right? Then on the same time frame, you now start getting something like this. Okay, it might be very, very complicated. That's just the truth. Like you might see a ton of this. All right. Now, depending on the time frame, this is why we have rules. Okay. So depending on the time frame you're finding yourself, you should make things to be as simple as it should be, right? Because the market can make things very difficult. So if you have a simple rule to follow, right, you are good. Now, personally, I'm trading what? I'm trading the 4 hours time frame. I think when we start doing more of the analysis, you're going to be understanding stuffs like this. I'm going to be showing you a little bit of examples also. Now, just understand structure. Just understand this simple thing. Now, when you are having your external structures like this, right? Anything that is happening here is your internal structure. Do you understand? Anything that's happening here is your internal structure to take back external structure, right? So that is how it's supposed to be. This is how it is supposed to be. And a lot of times this is how it is going to be, right? Um Now there are certain rules that act as guide for myself, right? That I make use of. So now what are these rules? Now in terms of going to be talking about some few things. Let me make this a bit bigger, although I like it small. Now, in terms of direction, in terms of direction, right? I am looking at the daily time frame and the 4 hours time frame. These are time frames I'm looking at. So I'm not going to a lower time frame to go and be looking for what structure type am I having here. Now, this is why a lot of your idolos they are telling you that you should shrink your chart. They are shrinking their charts because they are trading the lower time frame. I think I talked about this also in the previous course, right? In the first part, they are shrinking their charts because they are trading lower time frames. Okay, so they have to shrink their charts because if we are looking at this, if you're looking at zooming in from a lower time frame, you are going to be confused. That's just the truth, right? So they have to shrink their charts. So instead of shrinking your charts, just make use of the higher time frame. Like, I mean, if you go down, you shrink your chart, you pick your swing point, right? And then you check your 4 hours time frame and your daily time frame. You see that that swing point that you're picking is aligning with either these 4 hours or the daily. I have talked about this and I cannot stress this enough. Okay, So there's basically no need. It should be as simple as this. That is all I can say. Okay. Now, direction wise, we have our daily time frame and our 4 hours time frame. So I am not looking at any other time frame for directions. Do you understand? Now, why I'm doing this is so that I am not going to be trading all the time. You don't necessarily have to be trading all the time, right? Although what I'm going to be showing you guys is something that is repeatable, right? Or is something that can be used on every time frame. You can use it on lower time frames, right? So I'm not deciding to make use of the 4 hours time of the 1 hour time frame rather, because the 1 hour time frame might give me choppy, you know, choppy structural points. So I just want to I want to deal with um I want to deal with a time frame that is in between, right? And 4 hours is like the best time frame for day trading and even holding to swing, right? So these are the two time frames I'm looking at for direction. Now, when it comes to entry, every other time frame that you see here falls under this, the 1 hour, right? The 30 minutes, the 15 minutes, and the 5 minutes, right? So all of this has to do with entry. Sorry, this is supposed to be entry. So when it comes to entry, these are time frames I'm looking out for. That is all. That is all. That is basically it. This is how it is basically supposed to be. All right. So less is more. So the previous course I talked about 4 hours as your direction, then 5 minutes, then I think 1 minute. Right. I'm not a fan of the 1 minute, so I do not really make use of it. So usually before I was making use of the 4 hours and the 5 minutes. Now one of the lapses with that, because I need to talk about it and why we are having this at the moment. Nothing has changed on how I am trading. I just have certain improvements right now. Okay. And I'm also still trying to adjust to it because I've been taking a lot of hits lately. So you need to know like why these things are happening. Do you understand? So I've been getting hit sincerely. So I have, should I say that I have fixed them, right? And I'm going to be practicalizing this. So we're going to be doing back testing sessions together. We're going to be doing not just back testing sessions together, we're going to also be doing live trading sessions too, taking records of my trades, showing you guys that okay, yes, this is what I did, right? And all of that. So why I changed from just looking at the 4 hours and all of that is, well, every month will not be the same. The 4 hours might be giving you a huge um trades, right? But then there are times that you want to get into a trade and then you want to learn to hold longer term, right? So that is why I'm using the daily time frame now. I do not trade directly from the daily time frame. Okay. I trade the 4 hours direction. So forget the fact that I'm having the daily here. Now the reason why I'm having the daily time frame here is I want to know where my daily spots are, my daily zones, right? Then when I know that, I want to know when to hold my trades longer. Do you understand? So when I should be having higher targets and all of those things, right? So this is why I have my daily time frame here. So for example, now you can see this BTC. I have this daily flip zone here, but I will not be trading directly from this. This is why I've now dropped down. Remember, if we go to daily time frame, this is what you just have. Okay, now you can make use of your line chart. What do you have? Push to the downside, push to the upside, and yes, price cleared. Sorry, price took this high, and now this is a flip zone. Now this is a zone that price can react from and probably start buying from. So remember external structure wise how we are bearish. Okay, on the 4 hours and on the daily. Now price needs to retest. Price has retested. Price has come into 50% level in terms of supply and demand. So I told you guys that price needs to come to 50% level before I'm looking at doing anything. So I've been trying to sell from here, right? But then as you can see, price failed to do what, to clear this low, and now we are pushing back upwards. Okay, so at the moment I'm interested in just buying because price has invalidated here. Now why I'm not taking here as why I'm not really taking it as an inducement, although it is, right? So you can see that from there, sell short term to do what, to buy. Now I did not have any entry opportunity, or yesterday I was looking at my charts like this, so I had this point for price for me to trade back into. So these things are simple, right? So now I have this POI here, and on the 4 hours time frame, what do I have? I have this. So what do I basically want to see now? Depending on how this candle closes within the next 1 hour 15 minutes, right? I should know how I am structuring myself or how I am positioning myself. If this candle just goes up like this, I'm not going to be considering this place to be a structure, because usually here is supposed to be what, a bearish candle closure. So it's no longer going to be a structure. Now, when we do it like this, you can understand why. Okay, so it needed to close to take this level. So what I'm going to be looking out for is I'm going to be looking out for price coming into this level here. Okay, that is this low, coming to retest that level. Then if we are respecting here and we have something like this, I can sell I can sell back to the downside to clear where, to clear that low. Okay, else if price comes into this level, right, and then it fails, then I can reclaim, or we have this, and then I buy back to the upside to clear this high, and also targeting this level. So I'm going to be telling you guys why I'm targeting that level. Something called incomplete pullback. I talked about incomplete pullback also on the previous course. So these are things that you should actually understand, right? So up next we're going to be talking about the incomplete pullback, right? So this is how I have it: direction this, entry this. Okay, so when I'm coming into my charts, the first thing I'm doing is, aside from going to look at fundamental events and which of the fundamental events that that is coming out. So let me just talk about this here. Fundamental events, I'm not looking at all the fundamental events, and I'm not, I don't, back in the days I trade fundamentals. I do not do that anymore. So for fundamental events, all I do is I avoid some fundamental events. So fundamental, this is called news events. Okay, so news events that I avoid, I talked about this also in the previous course. So you can see how this is impossible without you going through that. So all of this that I'm doing is a recap. So I avoid interest rates, I avoid inflation rate, I avoid unemployment rate, um I avoid NFP, and you can avoid the FOMC also, right? Now, but majorly, so let's say majorly these events, one, two, three, four, these five news events, right? Interest rates of any pair that I'm trading. So if I'm trading USD card, I'm looking at USD news and Canadian dollar news. So anytime each of these countries are having these news events during that period, I want to stay off like 30 minutes before that period, or 15 minutes before that period, or even 10 minutes before that period. I 10 minutes before the news minimum, or 5 minutes before the news minimum, I want to be off. Why is, I do not want to expose myself when there are these when these events are there, because what we are going to be getting is a lot of times we are going to be seeing volume. Does it mean that we cannot trade this news event? Absolutely, we can, especially during periods that we have already gotten into a trade. We can hold through this news event, but it is not advisable. Why? Because this event comes with spikes. So you will be gambling if you're holding your trades during this news. That is just a fact. So we want to be trading when we do not have this particular news event, this particular high impact news event. Aside from this high impact news event, every other high impact news event, I trade them, right? So these are just what I avoid. So I catch you on the next one.